Okay, again, good morning, everyone. And this is DFW 2401 Workshop 1, Week 1. Today, we have, as I'm progressing in the workshop, please stop me anytime or raise questions. If you open the mic and you say you ask a question, it will be better. If you can chat, it's also better. It's also good. But I like, if you can just talk. Turn on your mic and talk. So I choose to cover the following things. I choose to cover the first 30 minutes. Hopefully we can cover the first 30 minutes. We can cover what we call the overview of the topics covered in this unit. We'll talk also about the teaching team. I think what is more important for you is the assessment and the expectations. Um, and I really have a good package for that. Improve it very much. I looked at what the students have said for the last 2 semesters, especially last semester, and I improve it in a way that will make everybody hopefully learn um, as much as we can, score as much as we can, be happy and positive, and more importantly, actually, I want you and me to work on these units and achieving those goals in a very, very efficient way. So I have thought about it. I thought about efficiency. See, you are very busy people. I understand. This is my experience with my students. You have 12 weeks. You have to, what you call 4 units. And I know what every lecturer, demands. So I said, okay, my unit always is a very heavy unit, so many topics inside it. But I said, if I can arrange the assessments in a way that will make the performance and the preparation for the exams and for the activities more efficient and easy, of course. We want it efficient, but we want it most importantly to be useful. So this is my approach in that one, and I will explain it. Now, the second item, as I told you, we will talk about, we will talk about the workshop, the tutorial, the final exam. I want you to know it from now. And also in the second, we will talk about the workshop questions. We have 15 questions, which I choose them to be different and this is what we will do. So the workshops will be always different from the tutorials and from the lecture. So the three components, lecture, tutorial, and workshop should be, 3 items to complement each other. Deep things should be discussed in the workshops because it's interactive and all these things, and we have more time. And the whole group is here, okay? So let me now I want you to relax and listen carefully to what I will say about the overview of this banking issue and where we are actually. Look, I brought this is not examinable. I'm not examining you in this. This is just all those slides until the end is just the introduction. So just to keep you in the picture. So this is the Australian financial structure. In any country, there is a financial structure. We are part of that financial structure, whether we are in the financial institutions or we are in the market. Now, according to here, as you can see, this is what we call the institutions. And actually in institution, this is for example, the Australian one, you have the central bank, which is the Reserve Bank of Australia, and we have the banking institutions. And we have other what we call authorized deposit taking institution. They call them like this in Australia. Here we call them a different name. And then we have non-banking. This is a banking one. We are working here in just one piece here. Now, we could expand or sometime talk about the other things, but actually we are not covered it. So this is also part of the financial institutions. Our main concern is the 60%, 70% of the total asset of those institutions, which is the commercial banking. Now, When you go in year 3, you will go to the market. And when you go, for example, to BFW 3121, when you go to BFW 3121, which is the investment class, 2741, when you go to for the what you call the derivatives, all of those, even when you go to 2341, which is the financial, what you call international business. So all of those actually are working in the market, either foreign exchange market or money market and capital market or derivatives. We are not covering this issue. We are only covering these issues when we need it in our operations, okay? But we are not really studying the market. So having said that, if you look at, and I think most of the students, almost 70% are local students. So, and also this is good for international students, but international students can look also to the financial system in their countries. We have in this country the following. We have, as I told you, the same thing. We have the banking institutions. We have the non-banking institutions, but all of those are still institutions. And we have the market, almost the same. The thing that is added here, we have an Islamic banks in this country, which is another. It represents around 23 to 25% of the financial system. That you are talking about the Sharia compliant firms, which is the Islamic companies, or you talk about Islamic banks, which we have 16 banks. Now, the rest are actually like Australia. Now, we are working in this area. This is the banking institutions. We are working with this guy, the commercial banks. We are not talking Islamic banks. We are not talking Marshall banks. We are not talking about all of those things. Having said that, so I want you to know where we are, where we stand, and within this financial system. And as you progress in your degree, especially those finance majors or non-finance majors, you should know where you stand. So in terms of your career development in the future, your employers, your interest in what to do, okay? Banking, of course, in Australia and in this country is top banking. Australia is considered number 7 in the world, better than most European countries in terms of banking. Very, very strong banking. Malaysia also have, restructured their banking after 1998. They used to have a lot of banking, small companies, they just make it big local banks. But the banking sector in Malaysia is also progressing, not as, especially in terms of regulation, not unlike Australia, but it's also developing. Okay, now we come back to, if this is the banking, and we are here, as I told you, we want to know what these banks do, which is, we already talked about it. Let me just, I don't want these things to bother us. Make it airplane mode, yeah. So, so this is, we already talked about it this week, and I'm happy actually I talked about it this week. We talked about all these things, so when I come to here, you already know. Which means, if this is the financial intermediation issue, now we go to what we call I just saw the watch 2:41. I thought we already past 40 minutes, only 10 minutes. So this is the balance sheet. This is the balance sheet. So we get to do this intermediation, the bank formed this balance sheet, which means they have a liability portfolio, which they have to be very, very smart, how much they should get from the deposit. They should do very good diversification here, so to avoid risks that I will tell you in the future. So they built here a portfolio. This portfolio actually finance a portfolio of assets. Now, if you look at the portfolio of the bank here, you will find the deposits, which represent actually 60%, 60%, 58% in Australia, same like this country. You have trading liabilities, you have debt, which is the bonds and all these things, and we have the capital, which is around 10%. according to Basel III regulations. All of this should go smartly and finance the loan trading assets. Of course, a little bit probability, the building and I don't know what, and this structure of the business, but it's not a big deal. We are talking about the what you call earning assets, either loans or market. Either we go and give all those type of loans, or either we go and trade in the market. And when we trade in the market, as I told you, we can trade in stocks and bonds, and all those primary securities, including derivatives. Now, let's start a bank together today. And I was thinking about it. I said, I will give and it's very simple. If you have the money, it's not a big deal. I mean, you have to have certain credibility, but if this is the issue, it's fine. I will just bring good people from Monash. I will just bring, have some type of capital, and they can in that moment start a bank. It should be a building somewhere with some branches. Start receiving deposits, giving loans. It looks like fun. And it's a very rewarding and lucrative business if it works very well. So according in Malaysia, if I have now investors coming from the Middle East, if you have investors coming from Indonesia, from Korea, maybe from Singapore, and the Malaysian, and the Malaysian market started to pick up. Now we are not really doing very well, but this is what's going to happen. Actually, there is an act called Commercial Banking Act 2013, and the minister actually authorized who goes in that business. But the most important thing to go to the business is to have a capital and real capital. In this country, they ask for 1 billion ringgit. Put it there. And therefore, you need investors. You need actually big investors. It's not like me and you and those. You need huge establishers. At least they provide 60-70% before they go IPOs or whatever. So when you bought that 1 billion, especially those banks are built by other banks, by other governments, by huge financial institutions, by huge companies. They can start bank because they can provide that 1 billion. So, okay, I get the 1 billion, I get the license, I'm okay, I'm fine. The license is from the Ministry of Finance, according to Commercial Banking Act 2013, which is the governing act. Now, who is going to, then monitor me and regulate me later on is Bank Negara. Now, then this 1 billion should be at least 10.5% of the assets I'm giving, I'm initiating, which means it's not they open the bank, I go and take 100 billion deposits, then I go and do 100 billion assets, invest in the market and in currencies and in loans or whatever. I cannot do that. Of each dollar I gave or I invest in loans or in securities, I should have 10.5 cents of it in each dollar, and this is according to Malaysia, Australia, and all those countries already complying 100% with Basel requirement, which we will talk about it later on. So it's 10.5% capital. So which means if it is 10.5%, if I use this formula, 1 over earning assets equal 10.5%, which means $1 over the assets equal 10.5%, which means the assets should be 9.52 times or 9.52 billion. It's if you solve for the assets here. Okay, now out of this, which means I am able to give loans and invest in the market for 9.52. Now the liabilities, I can raise how much liabilities? I can raise 9.52 minus my 1 billion, which is the capital. So 852. So 852, I should get it from liabilities. Now, according to, you can research it, but according to this best banking efficiency, or the model, the expenses is between admin expenses 5% of revenues, which is the interest income. And corporate tax, as you know, it's 25% in this country. Let's see that we operated in our capacity, and we get 900 million, 950. Look, if average cost of liabilities is 5%, and the average lending rate is 10%. So when I get all those deposits, all of this street deposit trading is 5%. I'm not talking about the capital. All of those is 5%. And the loans and the trading will give me 10%. Now, business loans today is actually giving 12 to 15%. Credit card, 18%. If I bought a deposit, I told you best deposit, it will give me 4%. Anyways, I can build my financial statement. If I invest if I invest 9 billion, so in this case, I will get 900 million of 10%, which is interest income. Now, the interest expenses is 852, which is the liabilities, times 5%, 426. So the net interest income is 474, actually. Admin expenses is 5% of the 900, which is 45. And then the earnings before tax is 499. If I take tax of 25%, I get 1.7. Then I get net income 322. ROE is 322 over 1 billion. This is the return on equity, 32%. This is a very, very good business. And this is actually a very real, it's not a make-up number, very hypothetical. I'm using industry data. Now, therefore, everybody should do business. Everybody should do banking. But we don't see all that banking, and we don't see this 32%. Actually, if you look at the Maybank now or public bank, you are talking about return of 7% to 8%. The problem is the risk. The problem is the risks. So many risks to run a bank, so many losses, so many liquidity you have to keep as cash. It's not like I can invest all my money and everything just, it's a very, very beautiful life and it's all rosy thing and everything would be okay. Actually, best banking in the world is the Australian banks. They get 16% ROE. Europeans are dreaming of the 5% or 4%. As I told you, for Malaysia, you get 7 to 8%, which is the return equity. Now, how to run a bank? We are saying it's a risk, which means now, look at this. This is the relationship, and this is a very, we'll talk about it later, but this is very, this is the banking model actually. See, if I was hired today as a banker, if I was hired as a banker now, and I want to increase my, for example, they give me some type of compensation package. If they give me this return, now in this case, I can just go and give loans to everyone and increase their loans, quality loans, good loans, people who deserve it, people who doesn't deserve it, just open, give loans to, and invest everywhere or give everywhere. When you give loans, this is the nature of the borrowers. They are so good people in the first 2 3 years. Talk about housing loans, car loans, credit card loans, whatever. During the first 2 3 years, they are so nice people. Later on, the problem starts, especially when there is, this cycle in the economy, recession, booming, So when I, for example, talk about credit risk, if I give too much, I will have more credit risk, but I will have more return. If it is liquidity, the regulation tell me, hey, you have to keep at least, for example, in Australia, 80% of your total asset as cash. If somebody come, you honor their liquidity. And this money is not actually used. If I say, okay, I will just use 2% and I will invest the rest. Yes, you will increase the money, but you will increase the risk. Therefore, the regulators will come to the picture and say, hey, 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 where are you going? They start to punish you. So we come to this graph. As you can see here, if this is the value of the bank, which we started, I can continue with return, which is, for example, increase the non-loans, decrease capital, decrease. This is will apply more to the loans. Look, and we will continue. So this is the shareholders' value. This is the shareholders' value, and this is the risk. Now, but the regulators will come and start to punish me. So actually, this return will be minus some type of risk. And actually, I come to this quadratic equation. It's not this linear one, but it becomes quadratic equation. And now I have to look here. For example, if I'm talking about giving loans, I should stop in this area, and we can calculate it and simulate it. If I say, oh, no, I'm continuing, actually you start to decrease the value of the, look, the value here. But if you stop here, this is the best you can get. Now, managers are trying always to calculate this area. When we talk about any risk and managing any risk, this is the basic model of what we are doing. So the rule is increase the return as long as the marginal increase in shareholders' wealth due to the increase in return outweighs the marginal decrease in shareholders' value from increased compliance cost, which means this one. Which means I will continue until here. Here, the rule now is not working. My risk and compliance cost is higher than the return I'm making. It's no use. So having said that, let's look at the capital, which is the most important thing. The capital of the bank is we are having so many risks, and I will explain it in a way and in time. Now, this risk is a fact of life when we are in banking. How can we get rid of those risks? One of the things is to have systems to comply with the regulations. And actually, this yellow thing is the systems. We will have systems. Now, the risk will come, and we have credit risk systems. We have liquidity systems. We have capital requirements. We have all of those. Is actually the risk is coming here. When they come here, they die here. For example, when we have what we call bad debt, we have enough what we call provisions for bad debt. So if there is a bad debt there, then I can control it before it goes to the capital. Because if the risk is too much, like what happened during the financial crisis or during COVID, and the risk cannot die here, it will move and go to the capital. Because the capital is actually the buffer, and it will start. See, in corporations, I can make losses, and I can continue with losses. I can eat the capital and continue on losses, unless the debtors come and start to make me problems. Here in banks, if the capital is over, so you have losses, credit risks, for example, so many people make losses. Now we have provisions. I absorb that losses, but it's not enough. For example, I make losses of 10%, the provision only 4%. So the capital has to take 6%. If the capital 10%, 6%, I'm left with 4%. No problem. But if the capital 5%, I'm bankrupt. We don't want to be bankrupt. The moment you touch $1 from the depositor's money, you are gone. So our goal in this class is not to teach marketing, study all those things. It looks like I'm approaching my 30 minutes. I will take maybe more 10 minutes. It just was I don't think the workshop will take The question will take 1 hour, but this is very important. So having said that, I come here, which means now we are not studying the marketing. We are not studying how to bring more depositors. We are not studying how to make new products. All what we are doing in this class is to manage those risks. So if you look at the unit, this is our unit. And let me put it here. Okay. This is actually this is this is what we are talking about. This is the whole thing. This is the model. We want risks, and these risks we have to care about it and take care of by management. And then we want to go to the capital. We don't want to go to this stage. Therefore, those risks are actually so many. And those risks are actually interest rate risk, and we will talk about it in week 2. Liquidity risk. We have single loan risk, which is the credit risk. We have portfolio loan risk, which is also credit risk. We have market risk. We have foreign exchange risk. This is when we deal market risk, when we deal in the market and buying stock and bonds and whatever, we have to take care of that. This is when we give loans, which is a single loan, and the portfolio loans. And this is, as I told you, market risk. This is the foreign exchange operations, which is the the trading in currencies. And this is the capital, whether we have in a capital risk. And this is the sovereign risk, which is the country risk when we work in some other banks and some other countries. And then we are subject to the risk of other governments. Now, to deal with this risk, we have a regulation package to decrease those risks and control those risks. And this regulation, local regulation and international regulations. So if we talk about regulations, you are talking about Basel III for capital adequacy and for liquidity. EBRA and Australia also have their own regulations, and Bank Negara Malaysia also have on their regulations. And those regulations deal with all those type of risks from the regulator's perspective to protect the system, to keep the systematic risk, but also from the private perspective, we have risk management tools. We can sell the loans and make securitization. We have loans, we have problem with the loans, we can sell them. And all the time, we can use financial derivatives to hedge our risks, either in the market or in the liquidity or in the capital. Always we can use derivatives to help us in those ones. In our class, we will talk about the derivatives to protect the interest rate risk, and we will talk about it when we talk about market risk, and we'll talk about it when we talk about credit risk. See, 3 areas we will talk actually specifically about some financial products and contracts, derivative contracts to deal with that. Now, to come and talk now, this is, we will take it in week 2. We'll take it also in week 2. In week 2, we will concentrate on interest rate risk. Then in week 5, we'll talk about capital risk. In week 6, we will talk about liquidity risk. 7, we will talk about single loan risk, which is the credit risk. And 8, we'll talk about portfolio risk. And 10, we'll talk about market risk. Now, for week 10, we'll talk about the derivatives, financial derivatives. And in week 11, we'll talk about the regulation, Basel III. And in week 12, we will talk about local regulation. And in week 3, we will talk about loans and securitization. This is the 12 weeks. This is 11 weeks, actually. And this is our friend, which we already take it, which is the financial intermediation, and which is we take it in week 1, we are done. So this is how the unit look. I will show you this screen, this slide every time we meet, so to tell you where we are. But this is how to give you a look of the unit. Now, having said that, let me go to, please, in studying each risk, just one more thing. We have to, for example, we are studying interest rate risk next week. We want to know, we have to define it, which means how does it come, this interest rate risk? Okay, we know it now. Then how we measure it, how much is it? Because your boss and the banks and the board need how much our exposure in interest rate risk. When we know that, okay, now we know it, and we know that we have maybe 50 million interest rate risk for next year. This is the changes in our net interest income, could be because of the interest and the interest rate in the future. Then the next question is what you are going to do about it. How we can solve this problem. We know a problem, we know how much is it, and we want to solve it. So in each risk, we'll talk about those 3 issues. And we will just one package and go. Sometimes the chapters, as I told you, overlapping in terms of the management, but if you look at the whole picture, it will be okay. Now, let's talk about the teaching team. Somebody asked me to talk about the teaching team. I will talk about myself. I didn't know what to talk about myself, but I've been doing so many things in my life. So just briefly, I've been here in Monash 10 years. I have taught everything. I have taken so many positions and the teaching, and I taught international business. I taught Islamic finance. I taught Islamic banking. I taught commercial banking. Commercial banking, I have been teaching this unit for almost 10 years now. I was a banker in my life for 8 years. I was the CEO for big corporations for 3 years, around 1,800 employees, so many things. But as I told you, business and banking also is progressing. My education is actually from the USA. I married in the USA. I lived in Florida for a long time, for some time. I did business in the Middle East for 6 years. I did shipping, not shipping, fishing and shipping. I did, but the main business was fishing. I ran trawlers after I finished that corporation. So we catch shrimp and lobsters and whatever, send it to Europe and all these things. Now I help startups managing their liquidity requirements, because I know in banking and all those startups have problems with managing their liquidity, especially when you are talking about this high liquid businesses. Talk about restaurant businesses, talk about those type of businesses that needs always cash. So I help them how to manage that. I arrange with banks and do these things. It's an easy thing for me. I used to do it when I was in business. Now we have a very good man, Mr. Obian, who is teaching with me for the first time. He has 6 years in the area of finance. He has been here for a long time. He's a very, very good personality. I like him. He's a CCA, as you see, and I think he has introduced himself to you, to his students. But he has, I think he's, an excellent ECCA and also a trainer. So he's involved in those issues. So he's a good person. I only started to teach with him this time, but I'm the one who picked him, who chose him. And actually, I think we'll do a very, very good job together. We have this is my PhD student, and he is the background teaching and helping slides and doing all those things. So this is Tawhidul, and Tawhidul is not teaching, Maybe he will come to one tutorial or guest lecture or whatever one day, but that's all about it. And but he's working in preparing those help me in the tutorials, help me in all those things. I give him some assignments and he does it. So he's part of the teaching team in terms of the preparation. Now, the book. I think one of the students, if she's here, Amanda, she sent me an email about this book, and I'm really sorry again to everyone, because this book was 320 ringgit, and no one can buy it. Besides, physical book, no one actually, not a lot of people now interested. So I talked to the publisher. I told them and I get a very good price. I get 85 ringgit. We can buy it online, 85 ringgit. Now they give me the link. I uploaded the link to one of the students, and I also tried the link. They say it's out of stock. So I talked to them yesterday and this morning and before yesterday, because this is an Australian book, they will settle it, they say, in 24 hours or whatever. They told me the other day, I mean 2 days ago, and Monday, they told me by Tuesday you can check, it will be there. So I talked to them yesterday. So maybe 2 days, one day, I don't know. Maybe they talked to me today. This is the book. I have another, you are at liberty to use any book and any resources. Okay, but this is what I recommend. And I will direct you to pages and all these things. Now, let me go to the assessment. Now, as I told you, the assessment structure was developed in a way that make our work. I want you to, as I told you, to learn first. I want you learning objectives to achieve those learning objectives. What you say, we want to score, and of course, all of you want to score, and I like you to score. It just not everybody will score HDs or Ds, whatever. It's the facts of life. Students are students, and there is a population for everything. But my unit is one, except for last semester. Always, I think first semester, 2000, yeah, when the COVID come, I had already 50% HDs, I think. These and HDs are 76%. And then there was an issue. But the semester before, semester 2, 2019, I think I have 60% or 75%, 60% D and HD. Now we are going around that one. Hopefully everything will be okay. I think according to what I have, to the, what you call the design of the assessment, you can do well. So I need you to score, and I need you also to be positive. More important, I want you to be efficient. If we can do this positive and happy, I want you to like the unit. So if we can do this, especially the efficiency issue, then we will be okay. I mean, I want you to do it, and I want you to do it efficiently and minimize your time and optimize your resources, okay? So let me go to, yes, you need to have a calculator for week 3. Somebody's asking. I will stop in a way and a time to receive all your questions. We need a calculator. Yeah, you need a calculator. So how we are going to communicate? I will share a document, and I will announce it. So this is will be a document where you can raise any questions, and I will raise the answers. And from the questions also, I will highlight and answer. But in this shared document, it will be, I will share it with all of you. So any question you want to ask, for example, like this, do we need calculator? I will answer it. So you can go over those questions. When we talk about any of those issues, sometimes I respond to one student, Very, very good questions in the email, but it goes privately. I will still answer you in the email, but I will take it and put it in the document. Or you can ask in the on the Google Doc, and it's anonymous. We don't know who you are. I know you, but the rest don't know. Don't worry. Just write anything. Of course, you write. You know. Yeah, I trust that you write anything, but of course it will be respectable. You know, respectful things. You know, I mean the way we address each other and all these things. Okay, now let me go to. I want to see the. You know what? I will do the following. I put it here, the document. I don't know where this go. Anyways, just relax. We'll talk about it. Yeah. Look, this is the. Somebody's asking whether we can use the 10th edition. You can use the 10th edition, but all my material is coming from the 5th edition. 9th edition and 10th edition is also a good book. But if I refer you to some of the things, yeah, uh, then I will refer it to this one. Okay. This is what see, we have three types of assessment. Um, Activities. We have the tutorials, we have the pre-class, and we have the workshop. This is the three things. This is the activities. The assessment, we have pre-class, we have tests, and we have the final exam. Now, in the pre-class, let me talk, which is the new item. Pre-class is, as you see, it's 10 marks. It's 10 marks and out of the total marks. So what we will do in this pre-class is a critical questions, which means now, for example, for this week, I will upload for you some type of video about the financial crisis and some information and 5 questions, and it will be uploaded and Moodle. So it's like a quiz. So you will, it will be true and false. Some of them is just very easy. Some of them, everything you answer is right. I mean, in terms of the mark. But then you have to explain why. I will take whatever you have said, I will look at the answers and upload in the shared document the best answers. So for example, I will ask you about the financial crisis. I will upload for you a video about the financial crisis after we talk about the rest. And I will ask you, what was the causes of financial crisis? The video is 15 minutes and maybe some other 2 or 3 multiple choice questions. And then you answer those ones. and hopefully, and I think everybody will that 10 marks should be no problem unless you rejected it. Should be no problem, which means 1 mark for each pre-class activity. Now, the second thing is the test. Now, the test, we have 4 tests. The first test is after in week 3, which means when week 1 and week 2. Why I have take week 1 and week 2 and make test 1, and then every 3 weeks 1 test. The reason I did this is because some of you are taking corporate finance, and we have problem last week. In the same day, in the same week, the student have 3 exams and maybe 3 assignments. So, but I know that corporate finance students are mostly my students. So in this case, I tried to make, I talked to him, he said he has 1 in week 7 and 1 in week 12. Maybe I have 1 in week 12, I will manage it, but the rest are different weeks. So this is why I make it week 2, week 6, week 9, and week 12. Now, how we are going to do it, I will give you the old exams. I will talk about it in the workshop. You will take the tutorial, the workshop, the old exams, my feedback, and the solution, and the video. There is video because last time we gave the exam, then we give the solution, and then I record it as a feedback. That all of those will give it to you. So you will have enough resources to do each test. So as I told you, this is very efficient. If you have the test, the old test, and its solution, and the explanations, and if you have the pre-class activities, and if you have the workshop, and if you have the tutorial, there is no way that you cannot score on the test. There is no way. Are you kidding me? You should be okay. And I don't want you to spend, to be very nerd. Just, use your time smartly. And I think you can score and you can be happy about that. So the way I presented, see, the problem, the purpose of the pre-class activity is actually Monash is moving towards what we call authentic assessment. Authentic assessment, we want to show you what is happening in the industry, what's happening in life, increasing your soft skills issue, critical thinking. I can do all this only in the pre-class activity because you will search, you will do, and you are not afraid that you will fail it. It's not like 1 + 1 = 2. I will let you write. I will let you express yourself. And I will, so we share what we are talking about. Yeah. So the pre-class activity is very good. The test should be okay. Now come to the final exam. Final exam, I tell you, I will test you only in 10 weeks, which means week 4, the performance and the regulation, I will not test you in the final exam. So I'm using the pre-class activities to do that one, to cover the learning objectives for week 4, which is the performance, and week 12, which is the regulations. So you will be tested only in 10 weeks. And then in these 10 weeks, I will tell you about the structure and the exam and time, but it should be okay. It should be, if we are going in this way, I don't think anybody will fail. This is, last time I have only 6 students failing, and then we managed to, I think 13 students, whatever, out of 229. This time, if there is 0 failing, it will be okay. But you are not going, I'm not going, for example, to give you favors and let you pass. And I know you, if you follow what I'm saying, you will pass and you will score and you will be happy and you will be efficient. That's what we want to do. Okay, having said that, my friends, let me go to the final exam. I will, when it comes to there, I will show you. I will give you all the tests. I give you all tests, and then we will try to solve that problem in time. Let me just one more thing. I'm sorry. I want you to ask using the mic so everybody can hear.
Excuse me, sir.
Yes, go ahead, please.
Who
Just
said,
give me a minute. Huh? So the assessment,
will this upload in
I cannot, I cannot hear you. Can you hear me?
okay.
Go ahead, go ahead. I think there is a question here, sir. How do we access the class quiz? I will upload for you all the quizzes. Now come back and ask me the question, please. Who was asking?
It's me,
Yeah, go ahead.
Rebecca.
Rebecca.
Will recording be uploaded in Moodle because most of us missed the first part of this workshop because we were in the other room just now.
Oh yeah, this recording, this workshop is recorded, and I will upload it for you.
Thank you.
Yeah, sure. Yeah, all of these things. I'm recording now. We are under recording, so all of these things you can look at them later on. Look, my friends, as I told you, week one, every chapter will take 3 marks. So we have here 3 for this first 2 weeks, 6 marks, and then 8, 8, 8, and then 10 is the, as I told you, the pre-week, which is 2, 4, 6, and 10, which is 12, 10 weeks. Look, one more advice. Maybe we talk about this also in the future. Look, my friend, when this is the way to do it. For example, we finish test 1. When we finish test 1, go and we finished week 1 and week 2, we take the test. Forget it. Forget it. Don't touch it at all until the end of the semester. 3 and 4 and 5, we finish it, control it, throw it away. Not throw it away, just put it away, and then continue. And this is how efficient you will be. And the final, when we come to the revision class, then we will go all over these things. I will give you more tests and all these things, and you will be okay. But you have to understand that during those weeks, week 1 and week 2, I want to be sure that you understand the material. So I will test you in that to be sure that you understand the material. So please, because you may not see it in the future, you will see it in the future, but not too much. Okay. I mean, you will not focus on it as you do now when we go over those. And it's only 3 weeks, 3 weeks. Let me tell you what the old students liked and didn't like. They like the tests. Last time I had assignment for 5%. They said it's too much. It's good, but it's too much for 5%. I mean, 5% is not enough. So I take it away and I put the prerequisite. In the exams, I use what you call sequential. So in the multiple choice questions, you solve the question, you go, you cannot back to the same question. Some of the questions, some of the students get panicked, and I continued with that during the 4 tests. This semester, I am not doing that. No sequential. You can go up and down and do whatever you like in the test. I just have to, we do it for collisions because students were solving together and sharing the questions, but now I have another way to control that issue. So if you want to see, because some students want to see all the questions, then relax, then start solving. The other one was they didn't know what is the next question. So that one I already remove it from the technical part, and it should be okay. Okay, my friends, uh, can we have 5 minutes for questions if you like to ask me? Any questions?
So,
Yes.
sorry to disturb. So I would like to ask for the class test is held in our tutorial session or is it held not in our tutorial session?
Thank you. So we have those workshops. So workshop 1, I will take it like now. Workshop 2, I will take it. Workshop 3 will be for the test. And the workshop
So-
time, it's from 10:30, yeah. 10:30.
So the
Yeah.
sorry. So the class test is held within the workshop.
Yeah.
Oh, okay. Thank you.
This is why we designed the workshop, so everybody can come.
Oh, okay.
Yeah, sure, sir.
Sir,
Yes, go ahead.
so which room is for our workshop, this or the previous one you uploaded a Moodle?
This, you mean the workshop?
Yeah,
This workshop, yeah, we will go over it now. Is this your question? I didn't get you.
no. Which link is for our workshop? Because you uploaded I think the wrong one on our Moodle.
Really? The question
As
you
in-
mean?
The Zoom
Because-
ID and password.
Oh, I haven't
For this
uploaded.
workshop.
I haven't uploaded any Zoom workshops. I uploaded only the lecture and YouTube.
No, what I mean is the Zoom link for workshop.
Yeah, it's uploaded.
Yeah, but you uploaded the wrong one.
Really?
It's
Because-
different. It's different with this one. This link and that link is different. So we joined the wrong room just now.
I'm sorry. Wait. Um, Is it this one or no? This is the one I
No.
use. This is the
No,
one.
this is not the one we using right now.
So student, what did you use to get here?
The link and the ID is different. The link and the meeting ID is different.
Oh, okay. Oh, I see. Thank you.
So if you click the link, it's okay, right?
The link is okay, but not the ID.
Also, the
Okay,
ID
okay.
and passwords are wrong.
Okay. I'm really sorry. I will change that. I will change it. So we'll change it. So because I click the link, it works. Okay. Okay. Any other questions, guys? You can ask about the assessment. You can ask about the. Yeah, this is the link. So should we go to the workshop if there is no questions about the assessment and all these things?
So I have a question.
Yeah, go
Can I
ahead.
know when will the pre-class quizzes will be due?
Oh, this is a very good question. So I want to open it for 3 days. So if I open it on Friday, you have 3 days to work on it until Monday. I will announce that, but it's not, so you will have 3 days to work on it. You can enter anytime.
Okay, noted. Thank you.
Yeah. So before Monday, it should be okay. Yeah. Any other questions? I think this is a good question. If you think about anything we can do with it, we can just answer it. Otherwise, we'll just, you can send me an email and then also I will upload that in the.
I have another question.
Yeah, go ahead.
Will it be like on Moodle? Will it be MCQ, or do we have to like upload the Word docs onto Moodle, something like that?
No, it's not like take home. It will be a quiz in Moodle, but 3 up to 5 questions. Sometimes I will make it up to 10 questions. Very easy. Some of them are true and false. Some of them multiple choice, and the most important question is essay. So you write whatever you like and upload, and they will lock it. So it will be a quiz.
Okay, thank you.
Sure.
Sorry, sir. Leading on to the next question about the test, the weekly test, the week 3, week 6, and week 9, that one. Would it be essay question or MCQ or?
All multiple choice. All multiple choice. All multiple choice questions. All the tests. But
Sir,
yes, sir, go ahead.
how is the pre-class activities graded?
So if it is 5 questions, for each question will be 2 marks, right? Now, because I have 1 mark for each pre-class. So I will cover it. So actually, if it is 5 questions, 20 basis points for each question. So it will be, so the system will mark it. And if it is 4 multiple choice questions, then, and 1 essay question, which is, the critical thinking. The critical thinking, every question will, every answer will be right. And the other ones will be marked according to that. So it's true and false, but it's not difficult. It's easy. For example, when I issue for the clip, which I will give you about the financial crisis, a question will be like, where did the financial crisis start? China,
All right.
Turkey, like those ones. What was the, and then when it comes to the critical thing, I will not ask you critical thing on it. I will just make it an essay questions. And all essay questions should be, I will make the system to be correct, to be graded, okay, but it doesn't have to be correct. As long as you try it, as long as you give your opinion. So it's, something like this.
All right. Is it single attempt or 3 attempts?
I haven't thought about it. I can make it more than 1 attempt. But one thing, don't worry, because they were open for 3 days. You wanted 2 attempts. I don't know why you didn't need it 2 attempts. But think about it before you solve it. I don't think you need to have more than 1 attempt. If you see the question, all the questions will be in front of you 1 page, then just think about it. The other thing is, please guys, Monash is very, very sensitive about this copyright things and plagiarism and all these issues. Don't copy and paste from others. Write your own. Don't do that at all. They already told us so many times about it, and they are very serious about it. So whatever you do, it should be your own work, especially when you write the essay question. Any other questions, Jonathan?
Sir.
Yes, sir.
I may miss out, but I'm still curious that in the unit schedule, right, under the assessment column, so the like you put final exam in every how do I say that, in every row. Can you explain that? Like, what is
what do I mean? Yeah. So I will test you some of the materials. For example, if you look at, let me go. If you look at the, I hope it's still there. If you look at week 12, it's not in the final exam. If you look at week 4, it's not in the final exam. So in the final exam will be structured like this. When I assess you, I will assess you and test you, for example, interest rate risk. I will test you, you will be responsible about it in the test, and you will be in test 2 and test 1, and it will be part of the final exam. So in 2 areas, you will be assessed.
Oh, okay, thank you.
Yeah, sure. Yeah, that's what I mean. It doesn't mean that if I test you in that exam, I will not test you anymore. Yeah. So also the learning objectives are repeated and achieved in each assessment item, but the final exam will be like this. It's a multiple choice question. There will be 2 or 3 areas which essay questions, and the rest will be multiple choice questions. So the multiple choice questions will be distributed equally among the 10 weeks. Yeah, don't worry about it now. Just think, look, I'm really positive, and I'm thinking this semester everybody should be happy, and I want you to be efficient when you do this unit. I mean, use a little, yeah, learn, but don't, be that nerd who kill himself and everything, because it's too much. It's just, the way we design it should help you to minimize, studying time and maximize, output. Yeah, go ahead, sir. Hello? Are we done? Okay.
Yes.
Okay. Okay. Thank you very much. So let me go now to the workshop. So the workshop is easy questions, but under every question, I want to alter your attention to something. For example, here in question number 1 is I give you some links, and I want you to know the banks. Am I going to test you how many banks in Malaysia, how many banks in the... No, of course, no. But I want you to access the regulators in Malaysia, because when we do the prerequisite test, when we do the prerequisite, what we call assessment, you will have to look at the regulators and all those things. Anyway, the number of banks in Malaysia is around 56 banks. Now, 26 of them are actually Islamic banks, commercial banks. We have 16 Islamic banks, which is actually subsidies or branches of those, but they are different, but they have different, what we call, they are not listed, but they are different entities. Now we have also the investment banks. As you know, we are doing only the commercial bank issue. And the commercial bank issue is that bank who invests in the market, who does loans, who help small businesses, personal loans, small businesses, and corporations. Okay? And this is where we are working. Now, investment banking is different. We'll talk about it later on, but it's not in our, this is a consulting and the writers and all these issues. And then we have LIP1. LIP1 is what we call, these people do everything. They would do trade, they will do banking, they will do corporates, they have tax exemption. I've been to that place. It's a very, very crowded business area, which is in Sabah. Okay, so this is the banks and Malaysia. The other thing is here, I ask you this question, also I give you the links. See, I want you to know two things. One thing is how you measure the banking industry. The way we measure banking industry is how much is the total assets of the bank to the GDP of the country. So if you look at Malaysia, the GDP of Malaysia, you can ask Siri and iPhone, tell her what is the GDP of Malaysia. It's around 322 billion. If you look at the banks in Malaysia, I think they are 1.4% of the GDP, which is huge thing. Now, if you go to Australia, GDP of Australia is around 2 trillion. The banking industry is, it's 1 trillion in Australia. The banking industry is twice the GDP, in Australia. This is one thing which we tell you how the development. The other thing is when we measure the industry. When we measure the industry, we go to any country, they tell you the big four, the big five, the big four. So in Australia, we have the big four, which is this Commonwealth, Australian and New Zealand, and the National Bank of Australia and Westpac. This is controlling 80% of the business in Australia, and banking business in Australia. Okay. Now in Malaysia, we have big five. Actually, I have BMAC, followed by Public Bank, CIMB, RHB, and Hong Leong. Now, this is where, why, so what, why do I need that? For example, if you want to see how your bank is working, and you are a small bank, you measure it to the average of those 4 banks, which is actually they serve as industry average, what we call industry average. You want to measure the you want to measure the ROE of your bank, then you measure up to the big 5 and Malaysia. So and those links help you to know about the banking. Now this is the purpose. The purpose is I want you to know the regulators and who are the regulators and what they are doing. And if you look at those links, it will take you to Bank Negara. It will give you so many information. Here, I want you to know to measure a country in terms of its banking system, how the banking system, and you measure it according to how the banking industry compared to the GDP. And then the other thing, as I told you, as an industry average. The second issue, I wanted to alter your attention to bank balance sheet, which actually we have talked about it. Now the balance sheet, if I can enter balance sheet now, I don't know. I can have this balance sheet, for example, and this is, for example, the assets and liabilities. So the sources actually is coming here. So the sources of the asset, if this is the assets, this is the liabilities, and this is the assets. All of this is actually is coming here. Is coming here in the liability side, which is all these sources. Now, if you want to know where is the assets, of course, where we use this money, we use it, of course, here in the asset side, which is all of this is actually asset side. Now, let's look at the balance sheet. We receive deposits, which is the normal deposit, but also we can borrow from the banks. And we can also borrow from outside. And we can raise capital. This is all the money we have. But then we have to bring up, when we use it, either loans, or either we lend the banking, or either we go to the market, securities, or either we work in currencies, or either we put it as reserves, which is in this country is 4%. So this is how actually the balance sheet. Now, if you want the breakdown of this one, we will talk about it when we talk about liabilities, deposits. We have so many types of deposits. And in the loan sales, we have the biggest is the housing loans. Then we have the commercial. This is the business. We have bank acceptance. This is money. This is what we call money market. And somebody would say, why so many markets? Yes. Banks cannot invest in bonds for 20 years. They are crazy about liquidity. They have to manage their liquidity. So they want always this money market products, which is 3 months, 2 months, 90 days, whatever. So they can manage their liquidity. But they are not like insurance company or pension fund. They will buy something and they will wait for the next 20 years until maturity. They cannot do that. And this is why they give loans. Even the loans they give today, it's already, they gave and they sell it. We have what we call bond sales. Now we have what we call Originate and distribute, which means I make the loan and then sell it for someone. So actually, this is for all for liquidity. So this is money market things, and this is the corporate bonds and the derivatives and the debentures. And then the securities, look, most of it actually is short term. And we have, so all of those actually securities from the market, insurance companies, and all those issues. And then, as I told you, they work in currencies, very active, and the rest of the money goes to the reserve. So please be aware of those issues. It's nice to understand how the balance sheet look like. Later on, we will talk about the income statement, which is net interest income and net interest expenses and all these things. We are not accounting class. We are not accounting class. It's just we have to touch on it a little bit. Now, we go to this question. Construct the activities for major Australian banks. Look, in this country, but in Australia, Australia have 64 banks, but only 4 banks, big banks, and actually hold 80% of the housing loans and of the total assets. Now, these people provide retail banking, commercial banking, investment banking, life insurance. Somebody will tell me, sir, what is this retail banking? Retail banking, like those branches we go. Even when we have now, we are going to have digital banking now. We will have, it's like retail banking, which means you go, you open account, you put a deposit as a person, like student or staff like me, whatever, like this branch in Sunway, and finish go and go. We can do that even in campus. That is a retail banking, that's small office. But if I am a company and I want to go on financing and I want to, you know, have a loan of 10 million ringgit, whatever, and we have to restructure so many things, then in this case, when we talk about even SMEs, small business, you know, corporations, whatever, we're really going in commercial banking. Now, so many banks in Australia, small, they do only retail banking. But the big 4 actually do the retail banking, which is helping us personal and helping corporations, commercial, and do investment banking. And somebody will say, sir, what is investment banking? Those people are crazy. I wish you work in investment banking in the future. Why? Because when you do investment banking, and I have worked with someone who was doing all this. Hong Leong is very, very active. They buy companies from the stock market. They sell companies. They do underwriting. They do IPOs. They provide consulting. They do very good business. Actually, they don't choose a lot of money. But they are, of course, when they do underwriting, for example, they buy your IPOs, all the issue, and they sell it, but they buy it from you for discount. That is a good. That is actually the use money. The other thing, which is when there is, you know, consolidations, when there is merging, when there is, you know, all those taking overs, you know, company, you know, merge companies, acquire new companies, acquire small companies, you know, those commercial banks, investment banks do. And of course, if we are a very holding company, big holding company, they can help you in that. And then they do all of those, they do life insurance. All of them, they have subsidiaries to do insurance. And even in Malaysia, all of them do the insurance. And they run funds. They also run mutual funds. All those banks in Australia and in Malaysia, you know, they run funds. So as you can see, they're already doing all those. Small banks, which is, they used to be credit unions, whatever, like societies of credit members, whatever, and they started to be, you know, they are in this town or in this city, and they were community bank, and then they become small banks. They provide retail banking. So regional banks is actually retail banking. This is just to make it. I bought this one. I don't know whether you need it or whatever. This is from first, you know, I read it from the online. So some definition about commercial banks, whatever. Maybe when I upload this, I will give it to you. Yeah. Number 8, what reasons have been given for the growth of superannuation funds? Yeah, superannuation funds is this like EPF we have. Those people issue securities. For example, they issue securities and you get some return out of that. But when they issue the securities, actually they guarantee. So the way they run their payments, they issue securities, but your money is actually guaranteed because they are financial institution. They give you the return of the market. A lot of investors want that. So they increase, this is why superannuation funds, ETFs, whatever, retirement money is actually increasing. The other thing is banks now under huge regulations, while these people under more exemptions, insurance companies, whatever, and support like pension funds and whatever, they subsidize them, they give them tax exemption. So this is also led to their growth. And the third one is starting, you know, the late 90s, you know, as we progress in time, it's actually from the 80s. Everybody has a pension fund. Everybody has to be part of these retirement plans. So these people started to accumulate huge funds, and this is why they started to grow, and they make investment and they issue, and you know, this is why the pension fund is actually the retirement money funds. They call it in Australia superannuation funds. Let's go to this question. Yeah, this is nice. Maybe we take 2 minutes or whatever. There is 2 concepts, what you call originate and hold, or originate and distribute. Originate and distribute comes only after 2008. Actually, in the early 2000s, and it was one of the problems of the financial crisis. What is the issue? The tradition, when I give you a loan, now a housing loan, you will be my partner in this loan. If I'm a bank and you are the borrower, for the next 20 years, you will pay me monthly payments, or you buy a car, 5 years, you pay me for the next 60 months, which is the 5 years. Now, and this is the traditional way we do it. Now we come up with, this is originate and hold. Originate the loan and hold it. Now they come with a new issue called originate and distribute. What do you mean? They take the loan. We have here Kagamas. We have in Australia so many securitization vehicles. So you originate the loans and you sell them in the same day. So Public Bank today announced that they will have so many loans for 2022, and they can give, for example, 500 million of loans. In the same day, they charge you the fees and all those things, and in the same day, they sell it to Kagamas. And they take the money and they start giving new loans. The government like that because they start to, always housing loans is there, always liquidity is there. The banks like that because they make a lot of money. So Kagamas, where do they bring the money from? They make all those loans, they back them, they make them back what we call back asset securities, and they issue bonds, and they sell it to the Middle East, to Korea, to Indonesia, to anywhere. So actually, we will talk about that in week 3, but this is what we call, you take the loan and you sell it. You make the loan, you originate the loan. This is what we call originate and distribute. So I want you to be aware of these 2 issues. Maybe if it is a multiple choice question, just very easy. What's the difference between the 2? Okay. Now let me go to mechanism. Look, this question, if you answer me, 1 answer. How can they manage their liquidity? Diversification. How can they manage your credit? How can banks can manage their credit risk, which is the price risk, better than us? Diversification. How do they can take very short liability and sell very long, very short liability, which is my money and your money, and invest it in a very, very long-term asset like housing loan? Diversification. So the word diversification of assets, liabilities is very important. So in liquidity, because you make your money in everywhere, so there's always coming cash. And that cash is enough actually to honor any claims, which is about 7 to 10% withdrawal daily. This is the riskier one. Always there is money coming, always come money back. And this is, we will discuss it in week 10, and week 6, which is liquidity. But if I tell you why banks are smart and ensuring liquidity all the time, the answer is diversification. Why the bank are smart so they avoid price risk? Because of diversification. Why the banks can take short liabilities and do long-term assets? Because of diversification. The explanation is here. It's what we have explained before so many times. Now let me go to this. What form of protection? This is regulations. So the regulations, we have big package. We have regulators ask you to diversify assets, which means invest in so many assets. And in the same time, you cannot give a loan of 10% of your capital, maximum 10%. Otherwise, it will be considered large exposure. They ask you to have enough capital. Now, Basel III asks for 10.5%. They ask you to be part of the guarantee deposit guarantee schemes. In this country, we use something called, they have so announcement, the IDM. If the bank collapse, they will give me and you 250,000, up to 500. So you have this guaranteed deposit come after the. So they will come and see the bank every time. So you have regulation for credit risk and diversification, for capital, for guarantee, and for monitoring and reporting. Next question for regulations. How do regulation regarding, as I told you today when I started, not anybody can do banking, because when you go, you need a license from the Ministry of Finance. Fine. And then in this case, also you need 1 billion ringgit. And then you have to provide a profile of the management, very qualified people. And all of those things, they will give you the license. So not anybody can go to this business. So this actually, what you call this regulation is preventing and deciding who should be in the business and who should be out of the business. Only qualified people get to the business, and if they show qualified, and then inside they don't do these things, they don't have capital, they don't comply with the regulation, they will kick them out. So this is what we say, how do regulation regarding barrier to entry and scope permitted activities affect the charter. This is the chartered, so chartered FIs can actually, the licensed ones can survive, because not anybody can compete with them. And their survival is very important for the system. And finally, what are the two important things which is actually coming in Basel III? The capital and liquidity risk and credit risk. So, but in Basel is actually, they care about this issue. The capital and the liquidity. And now, of course, the credit risk management. Credit risk management, for example, Bank Nigeria Malaysia, APRA Australia have their own credit risk management, credit risk regulation is a crazy thing for Bank Nigeria Malaysia. But capital and liquidity is actually already in the requirement of Basel. And Basel will talk about it in week 11, which is the bank regulations. I'm done, my friends, and I'm really sorry I take 2 minutes more. Any questions? Any questions?
No.
Okay. So I think there is here some questions. No, okay, okay. Well, thank you very much, guys.
Thank you.
Thank you.
Thank you, sir.
Thank
I
you,
think-
sir. Bye-bye.
Thank you, sir.
Thank you, sir.
Thank you, yeah. Thank you.
Mr. Taiban, I have a question, sir.
Yes, sir.
Are you gonna send us the PowerPoint before, sir, the solution, sir? Are you gonna upload it in Moodle?
This PowerPoint?
Yeah.
Yeah. For the workshop, you mean?
Yeah. Yes, sir.
Yeah.
Thank you, sir.
Sure.
Yeah.
Okay. Okay, then